Hey everyone, what's up? It's Delta Edge back with another video. And if you're someone who's really looking to maximize their returns in the market, this is the video for you. We're diving deep into the world of aggressive mutual funds. These are the funds that swing for the fences, aiming for those massive gains. But yeah, they come with a little more risk. It's like the difference between putting your money in a savings account versus investing in a rental property. The potential is there, but you gotta be smart about it. Now, if you stick around until the end of this video, I'm going to tell you how you can potentially win a reward worth 21,000 rupees. And I'm also going to give you 10 of my favorite financial calculators absolutely free. So make sure you watch the entire video. All right, let's dive into the first fund on our list, the SBI Small Cap Fund. Now, small cap stocks are like that new tech startup that everyone's talking about. They have the potential to absolutely explode in value. Think about companies like Tesla back in the day, before they were, Tesla. That's the kind of growth we're talking about. And this is but small cap companies are also inherently riskier. They're usually newer businesses, they might not have a proven track record, and they can be more volatile. So if you're investing in a small cap fund, you need to be prepared for a roller coaster ride. You could see some incredible highs, but you also need to be ready for some stomach churning drops. That being said, the SBI Small Cap Fund has historically been a solid performer. They've consistently beaten the market, and they have a strong management team with a proven track record. So, if you're looking for a high-growth, high-risk investment, this fund is definitely worth considering. But here's the thing. You should never put all your eggs in one basket. Diversification is key, especially when you're dealing with aggressive investments. Think about it like this. If you were betting on a horse race, would you put all your money on a single horse, even if it was the favorite? Probably not. You'd probably spread your bets around a bit, just in case. The same logic applies to investing. You want to have a mix of different asset classes in your portfolio, so that if one investment takes a hit, the others can help cushion the blow. So, while the SBI Small Cap Fund can be a great addition to an aggressive investor's portfolio, it's important to remember that it's just one piece of the puzzle. Don't go all in on any single investment, no matter how promising it may seem. Remember, diversification is your best friend when it comes to managing risk. Next up, we have the Mirae Asset Emerging Blue Chip Fund. Now, this fund focuses on a slightly different segment of the market emerging blue chip companies. These are companies that are a little bit bigger and more established than small cap companies, but they're still in their growth phase. They're like the teenager of the stock market. They've got a lot of potential, but they're still figuring things out. The Mirae Asset Emerging Blue Chip Fund has a strong track record of investing in these types of companies, and they've consistently outperformed the market. They have a disciplined investment process, and they're really good at identifying companies that are poised for growth. Now, investing in emerging markets like India can be riskier than investing in more developed markets. That's because emerging markets tend to be more volatile, and they can be more susceptible to political and economic instability. But on the flip side, emerging markets also offer the potential for higher returns. That's because they're growing at a much faster rate than developed markets, and there's a lot more room for growth. So if you're looking for a high-growth investment that also offers some diversification benefits, the Mirae Asset Emerging Blue Chip Fund could be a good option for you. Just remember, as with any investment, it's important to do your research and understand the risks involved before you invest. Chapter 3. Axis Mid-Cap Fund, Finding Hidden Gems in the Mid-Sized Market. And finally, we have the Axis Mid-Cap Fund. This fund invests in, you guessed it, mid-cap companies. Now, mid-cap companies fall somewhere between small-cap and large-cap companies in terms of size and risk. They're typically more established than small-cap companies, but they're not quite as big or as well known as large-cap companies. The Axis Mid-Cap Fund has a solid track record of investing in mid-cap companies, and they've consistently outperformed the market. They have a team of experienced portfolio managers who are really good at identifying undervalued companies that have the potential for growth. Now, one of the benefits of investing in mid-cap companies is that they can offer a good balance between risk and return. They're not as risky as small-cap companies, but they still have the potential to generate significant returns. Plus, mid-cap companies can be less volatile than large-cap companies, which can make them a good option for investors who are looking for a smoother ride. So, if you're looking for a diversified way to invest in the Indian stock market, the Axis Mid-Cap Fund could be a good option for you. That's it for today's video. If you're still watching, you're one of the few who made it to the end. which means you're serious about taking control of your finances. And that's awesome. Don't forget, I'm giving away a reward worth 21,000 rupees to one lucky viewer. All you have to do to enter is take a screenshot of yourself watching this video and send it to me on WhatsApp. Oh, and don't forget about those 10 free financial calculators I promised you. You can find the link to download them in the description below. As always, thanks for watching, and I'll catch you in the next one. Don't forget to like, subscribe, and hit that notification bell so you never miss an upload.